right, so hey, welcome Crypto University, welcome Empire Trading Group. We are so happy to have you guys all here for the call tonight, and thank you once again, Matt, for being the special guest here tonight to do some technical analysis for us and give us your perspective on the markets and where they're currently at. And thank you also, John, for joining us too. Definitely, man. Appreciate you, mate. And yeah, thanks for. I think we got a pretty international call here, people from all over the world, so should be a lot of fun. So anyway, we're in just a minute, whatever, I'll just kind of transfer stuff over here to Matt and kind of let him take it off. But I know, our goal here tonight is just to have some fun, look at the markets. If you guys have some coins and things like that, it is that you would like us to, chart or to take a look at. Once we get to that point in the call, definitely just, put those comments down in the chat section. If at any point Matt is, asking for questions, just feel free to, put those questions down in the chat. Or if he says, hey, unmute yourself, then obviously you can unmute yourself. We're just trying to do our best not to have like 5 or 10 people talking at the same time. So if you see somebody's already talking, be respectful, give them their time. And once they're done, then we can kind of flip to the next person. So that being said, thanks again, Matt. Appreciate it, mate. Things are been crazy in the markets lately, but we've been seeing up, down, left, and right. And, but as a trader, you can make money in all of that. So happy for the volatility and the crazy dips. I know I've been buying a few myself. So, with that being said, though, man, take it away from here, man.
Yeah, so thanks, Warren. Everyone, welcome. I guess first things first, couple of housekeepings. Me, Warren, aren't financial advisors. We don't hold security licenses. None of the information on this call should be taken as financial advice, right? So that's first things first. Now, what we're going to do is we're going to go through some basic TA in the intro bit. I mean, that'll be about 10, 15 minutes. Quite some basic stuff like support and resistance, a couple of candlesticks, and then also go through some basic market structure. Then from there, give a quick rundown of MBA, about 5 minutes worth, and what that's all about and how you can register if that's something you're interested in. And then we'll just go through a bunch of coins, do some charts, have some fun. People ask questions, and however we keep going, right? Let me share my screen and let me know when you can see that, and then we'll kick things off. Just minimize that. Oh, Warren, you need to allow me to share screen.
Yep, we should be good now.
All right, sweet. All right, so just quick intro. We've done that, so we can keep pushing on. Just quickly. So first things first that we always talk about, there's some of the MBA guys in the call, you would have seen this chart, have stolen it so everyone can have a look at it. Support is basically a price floor, right, where the price continues to bounce off. And if you look at this chart, basically every single time the price has, let's just say hypothetically, this is $1. Every single time the price has hit that level, basically it's had a bounce. So it's a level where there's a lot of sellers in the market, a lot of buyers in the market, and potentially hold the price up. Now, what happens as the price continues to hit that support, you can see that the buyers get weaker and weaker and weaker. Till eventually it breaks through the support level, right? So the support levels really is a point where there's a lot of buyers, but eventually those buyers will wear out. It's like anything. If you keep chipping away at like a stone or a rock, eventually that stone's going to break, and the price is going to come crashing down, right? So that's just a really quick example of what support looks like. And it's one of the key fundamentals of TA, and something that if you are trading that you need to be aware of. It's also something that you should be drawing on your charts straight away. It's the first thing you should be doing when you jump into a chart. Quick example of resistance. So opposite to support, resistance is basically a price ceiling. So every time the price gets to that point, again, let's use this as say $1 in this case. If this price was sitting at say 50 cents, every time it has gone up, it's basically got sellers at that point of resistance, right? So if you look left, 1, 2, 3, 4, 5. In those circumstances, every time the price has hit $1, it's come back down and basically refueling, let's say hypothetically, the rocket, so then it can give it another chance to pop back through the resistance level, right? And again, if you keep punching away at those sellers, eventually there's going to be no more sellers left, and that's when the price goes past the resistance level. So again, this is another key fundamental thing that you should know if you're trading. So guys, it's still early in my neck of the woods, so I'm just having a coffee. So yeah, resistance is one of the fundamentals. You need to know it. It is fantastic because once you start to identify the resistance level, you can identify it as a key point to take profit in your trades, right? And it's one of the things we teach within MBA is it's always good to say hypothetically, buy off support, sell at resistance, wait for the breakout, wait for the confirmation, and then to continue trading, right? There's no point hoping that you're going to break through resistance just for the sake of hoping it's going to play out even further, right? Don't get greedy, take your profits, re-enter. Then we just go quickly through candlestick. So the red and green candles that you see here basically have a meaning behind them, right? They're not just some red and green candles that someone's pasted up on a chart and mean nothing. Candlesticks represent a battle between buyers and sellers. It's as simple as that, right? The red ones are the sellers, the green ones are the buyers. The wicks to the top of the candles are typically where, say, the highest price has been, and then the wicks to the bottom, which is these long sections down the bottom, is the lowest point of the price. Now, the body of the candle is where the price is opened. So say hypothetically it opened at $1, but then it closed at 80 cents. That's where you would see that full body of the candle. Opposite to that, with the green one, if it opened at say 80 cents and closed at $1, then the candle would be green, and that would be the full body of the candle. Some real basics. Obviously, if you're charting, you need to understand what candlesticks mean. Another one here is bearish engulfing. So this is one of the key fundamentals of what we teach in MBA is how to read candlestick formations, right? It's quite simple once you get the hang of it because there is a fair few candlestick formations that you can pick up within the market. However, once you start to identify them, they become really, really easy to pick up. And there's some really good early signs to detect when there's reversals in the market or when there's an uptrend about to occur, right? So in this case here, a bearish engulfing is basically a big red candle that engulfs the entire smaller green candle. It basically signifies that the sellers are now much stronger than the buyers, right? As simple as that. Now, if you see something like this at a key point of resistance, probably a good chance the market's going to come down. Probably a good opportunity to short the market through a leverage trade, right? So guys, just a bit of background. My style of trading is particularly leverage. I don't hold anything. I don't hold it for long term. I'm purely in and out leverage trader. That's just my strategy. Everyone's different. Clear example of what a bearish engulfing looks like, right? Like I was saying, at a key point of resistance, big bearish engulfing, an indication that there's a reversal in the market, price comes down. Quite simple. Opposite to that, bullish engulfing, right? So big green candle engulfs the smaller red candle. Big indication that the buyers now outweigh the sellers. We've pushed past that level, and now we potentially could be on an uptrend. Now, another thing to note is one indication is not enough to determine the next predictions of the market, right? TA is never also 110% accurate, but it's up to you to read the story. It's basically you've got the start, the middle, but you haven't got the end. So what do you need for confirmation to enter that trade, right? Particularly for me, I always look for about 3 to 4 levels of confirmation or 3 to 4 indicators of confirmation before entering any trade. 1 or 2 is not enough. And again, that's just my style, but something to take note of. Clear example down here, bullish engulfing. So the price is in a downtrend. It's going down, 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 down. This would be a level of support. What happens there is you've got the inverted hammer at support, which is actually the first bullish signal. Indicates that the buyers can now start to push the price up and the sellers can't get the price below the level of support. Followed by that, you've got the bullish engulfing candle and then the price starts to rise. This is one formation that I really, really love to look out for. Morningstar. So Morningstar formation is great when you see it at the bottom of a downtrend, right? And if you look here, this is what you've got as well. So this 3 candlestick formation is a great example of a Morningstar at a key level of support. Basically indicates now that the buyers are in control and can start to push the price back up. That's clear. We already went for example, so we can skip that. Opposite to that, an evening star formation. So an evening star basically is at a key level of resistance. So opposite to support. The morning star demonstrates that the buyers can now bring up the price, and evening star demonstrates that the sellers are now in control of the price, right? And if you see this at a key level of resistance, it basically indicates that you can't break through that resistance level, right? And it's probably a good opportunity to short. So something to keep an eye out of. And a lot of people get caught out in this situation because they see this and they go, okay, well, we're in an uptrend, we're going well, we shouldn't have any issues. Got the big bullish candle. Now, we've tried to break through that resistance level, but you're getting these long wicks to the top, right? And it can't manage to break through. Now you've got this evening star formation and the price starts coming down. So something to keep an eye out of, because a lot of people get caught up in the fact, oh, we tried once, we'll try again, we should be okay. I mean, don't get me wrong, sometimes we try more than once and we might be in an ascending triangle formation, a couple other things, but a clear example is the evening star is quite negative for the price to go down. So just be mindful of that. Then last thing we're going to go through in TA, and guys, you'll see why I've gone through these three things here. They're really the key pillars of technical analysis. Very basic. I mean, I'm covering these off in 15 minutes, whereas we go through each of these in about an hour in each lesson in the MBA Trading Academy, right? So there's a little bit more to it. I haven't shown you all the candlestick formations. I haven't gone through in depth what support and resistance is, just really to give you a flavor of what to look for and things that you should be researching and understanding if you are jumping into trades, right? Market structure is the next one. So basically identifying uptrend, right? This is so simple, something that you should know, especially if you're one of those traders or one of those buyers who just tries to buy dips. Not the best strategy, in my opinion, anyway. Does work when you're in an uptrend. However, when we're in a downtrend like we are now, it's probably the worst bloody strategy you can do. But hey, it's up to you. You do what you want. It's your money. So in this example here, what you've got is you've got an uptrend. So you've got the higher high, which is indicating basically here, you've got the higher high. So the price is higher here than what it was previously. And below that, you've got the higher low. So basically the price at the lower point is higher than the previous low, right? Indicating that the price is in a continuation pattern of an uptrend. Quite simple, easy thing to identify. Simple example here, higher high, higher low, higher high, higher low. So in this case, if you're buying the dip, that's fine because you're still at a higher level than what you were previously, and then you go up to a higher high. Same thing. However, once it starts to go the other way, which is like this is where buying the dip doesn't work so well. What you've got here is you basically got a lower high price and a lower high price and a lower low and a lower low. So in this situation, what's happened is the price here is lower at its highest point than what it was previously. Clear indication here, and same here, you've got a lower low versus the previous lower low. So this is where new traders, new people into crypto get caught out. And we saw this recently with the BTC, right? BTC come crashing down. Everyone's like, yeah, just buy the dip, buy the dip. Dip kept going, dip kept going, dip kept going, and dip probably still going, but we've got to look at that later on. So in this case, what happens is price comes up, people get sucked into buying. They're like, oh, yeah, we're going back up, we're going back up. Next minute, price comes crashing down again, right? And this is clearly identified in a downtrend channel. And I've got an example of that later on. Quick example, lower low, lower high, lower low, lower low, lower high, right? So just a clear example where buying the dip wouldn't work. And then you've got sideways formations, right? So sideways formations is basically within support and resistance. A good understanding of this, and it's a really great opportunity if you know how to trade leverage, which majority of us do in MBA. Obviously, leverage trading is different across the globe. In the US, there's tighter restrictions. Australia, not so much. However, you can trade leverage in any market. It's just up to how you navigate through that, right? So in this situation, you'd simply say if there's 10% in this, for example, so from the bottom here, say $1 to, I'm not going to test my maths now, but to say $1.10 would be a 10% gain. And now if you were to buy here, sell here and trading leverage on, say, like 10 times leverage, you could basically make 100% up, sell, short the market from here, make 100% down, and so forth, right? So if you identify these patterns, they're actually quite good to make some quick gains. And then you look for the changing market structure within those sideways formations to identify the breakout or the breakdown. So that's all I'm going to go through with TA, some quick basics, good understanding. I'm going to show you guys what MBA is since I've made a mention of it. Everyone should obviously know what that is. Any questions on TA as yet? Is anything in the chat group before we keep punching on?
Hey, Matt. Can you hear me?
Go for it. Who's? Yes. Yep.
It's Boris.
Hey, mate.
I just joined a couple like a week ago or whatever. So it's my first Zoom meeting.
That's all right.
How's it going, everybody? Quick question, because you mentioned before, you always wait for at least 3 confirmations before making a decision, right? So, for example, what would you consider like a confirmation? So if I'm looking at the BTC chart right now as we speak, and it seems to have kind of broken out of that falling wedge, right? What would you consider a confirmation now? Would you wait for this 1 hour candle to close above the falling wedge line, or I guess what would be your idea of 3 confirmations in this case, for example?
Yeah, so good question, right? So I'm not looking at the BTC chart now, but just in general, right, what I mean by 3 points of confirmation, and you'll get a hang of this as you go through the course, Boris, but say if I'm trading to looking for a long position, right? If I get an indication, say on a CCI indicator that we've got bullish divergence, that would be one indication. If I see, say, a morning star at support, that would be another indication. If I see that the price is failing to break through support, that would be another indication, right? If I see that BTC is in an uptrend and I'm trading an altcoin, for instance, then that would be another confirmation, right? So, I mean, what I'm looking at is I'm looking at multiple points of, or multiple TA options to indicate that the price is going to move in the direction that I'm predicting, right? So for example, another example would be if I'm trading a symmetrical triangle, or actually we'll go back to this example, make it a lot easier. If I'm trading a formation like this, like a sideways formation, right? And I'm looking for a breakout in an uptrend, what I would be looking for is the change of market structure within the consolidation pattern. I would then be looking for the breakout, which would be the second point of confirmation. I would then be looking for a retest on that support, on that new support level, to identify that the support is now held up. And then that would be 3 points of confirmation, right? So it's reading the story and putting the pieces together. So then you can go, yep, that's 1, 2, 3. Okay, that's enough for me to choose that direction, right? You don't want to be jumping in just on the say, oh, the price has gone low enough and it's going to hold there, and that's the dip and that's the floor, and I should be sweet to keep moving on, right? You got to read the story. That's the biggest piece that people miss. And you'll come to learn this. There's a lot of things that you learn through the course that there's a lot of validation that comes with TA, right? And that's a lot of what's missed when you're looking at like YouTube videos and Twitter stuff and all the rest of the stuff online. There's a lot of validation that's missed behind TA, drawing trend lines and things like that. So you'll pick all that up. But there's a whole lesson on confirmation, basically, and entries and exits that you'll get to, mate.
Gotcha.
Does that answer?
Thanks. So that's that's probably because some of that stuff I haven't really gotten to yet in the course. So I'll probably understand it better when I continue through the training videos. But I guess in this case, like I was saying, in this BTC 1 hour chart at the moment, just because it broke out of that falling wedge, that's probably not enough to go long on, right? Because that might just easily come back down. I guess, I don't know, because it looks like it's pumping right now.
Go for it, John. Go for it.
Do you mind if I jump in and
of course.
I'll share some value with you guys as well. Since Matt's done an amazing job explaining the market structure and everything else. But what I'll do is, Boris, I'll jump in with you now and I'll share this with everyone else so you can actually see some of the things that we do in real time. But like Matt said first, just then, you should really be focusing on finishing the course first. Trading is literally 10% charting, 80% psychology. Actually, it's more like 10% charting, 40% risk management, 40% psychology. Learning just how to chart alone is not sufficient enough to be entering the market. But I'll use that question that you use, and I'll share my screen, and then that way we'll bring up BTC on the hourly chart. So something that Market said earlier, you first want to identify the market structure. So right now, what we're seeing right in front of us, and something that I don't like doing is focusing on the 1 hour. And the reason for that is big institutional money that actually moves the market, they always look at the daily.
Okay.
So the first thing we're seeing on the daily, right? Can you tell me, is the market going up, down, or sideways?
It's going obviously down.
Yep. So on the daily, we've confirmed that it's going down on the daily. Then we want to move down to the 4 hourly. And on the 4 hourly, do we see the market moving up, down, or sideways?
Well, I mean, let's see, on a 4 hour, I mean, the last 4 hours, well, obviously on the whole big picture, it's obviously moving downwards, right? So I guess you wouldn't look at the last 4 hours where it's kind of going sideways, right?
Yeah, so that's correct. And you see, as we move closer and closer down in the time frame, our view kind of looks like it's about to change. But in the most recent price action, in the last couple of swings, we're currently, so we were going up along there. I'll use the brush tool instead. We were going up there, higher highs, higher lows, but then it looked like we started going sideways. We stopped creating lower lows, we stopped creating higher highs. But on the last major drop, we've created another lower low.
Yeah.
So just based on the market cycle, market structure example that Matt's given us, we can safely say that the market's still going down. We don't have any real confirmation that it's going up. Like, yes, I do see that falling wedge that you're talking about, the one that's just right here, I'm assuming.
Yeah.
And we have a breakout, and usually that's going to be our first confirmation. But the next thing that we want to look at is where's the next area of resistance? Where is people coming in to push price down? So we're going to identify that by just popping the hourly resistance. It's going to be somewhere about here. And the reason why I say it's here is because when we're below that line, it gets pushed down. When we're above that line, it gets held up. So as we all know, when price breaks support, it becomes resistance. When price breaks resistance, it becomes support. And that's evident here. Price breaks through. Now it's a level of support, pushing price up, pushing price up, pushing price up, pushing price up, pushing price up. It goes down, it goes under the line. Now it's pushing price down. So yes, we do have a break here, but we haven't created higher highs or higher lows yet. So if we were to enter here, there is a high chance that all that may possibly happen is this. Bang, back down. We either create a lower high for the next move up, or we could potentially just be creating another lower low to coming back down to this level of support down here. See, it's a very dangerous spot trying to get into there. Or if we want a closer level of support, we could also have another level of support right here. As shown, price comes down, supports push up, down, push up, down, push up, down, push up, down, push up. But you see, like where you're about to enter right now, if you want to jump in, it's a bit of a FOMO entry. Like you see these large green candles, you've missed the initial move. And if you were to enter in, it's a bit of a gamble. If you were looking to enter, I'd be looking to enter on this level here to push back up. I'd be either looking to enter after it breaks above to come here, because if it lands on here and it retests the area, our next key level of resistance is about here. So I'll use this real time as well. So if we were to enter here, we have a possible chance of 2% up, or a possible 3% down. And if it breaks, it's a 11% down. So in terms of like just trade value, I wouldn't be looking at that. But if we waited for the next move, so if it breaks above and comes down, we could enter here. We're looking at a 7% move, and it's a lot safer as well. Or if it was to break below and you were to short the market, that could, wrong tool. that could potentially be a 8% down after you get a confirmation of a break retest coming downwards. If you were to just enter here, we're pretty much stuck in the middle. It's like no man's land, and we're kind of gambling a little bit.
Gotcha. So, that's an awesome explanation. Thank you.
All good. So just keep in mind, like as a trader, we don't actually predict what's going to happen in the market right now. We just, it's like planning your trip, right? So we want to get to this petrol station here to make the next leg of our trip. or we're going to take the wrong turn and end up at a different area, different petrol station, and we're going to go somewhere else. Because right now we're already on the way of the journey. We want to be at the start of the journey. If that makes sense.
Yeah, absolutely. Thanks,
Cool.
guys.
Oh,
That's
good.
a great.
Hopefully you
That's
guys
a
got
great
some value out
illustration.
of that. I'll pass it back. I'll pass it back to Matt.
That's good, man.
Awesome
Thank
job.
you.
We had just one question on Bitcoin. Now, I know we look at the daily and the 4 hour often, but they were asking about the 3 day. What would be your opinion on the 3 day, just in general, as a as an indicator, or as I don't typically check the 3 days myself, but I mean, what are your thoughts on a 3 day, and do you see anything on the 3 day? I guess was the question.
Yeah, I'll give my opinions, and then Matt can take over afterwards.
Go for it.
So the main key time frames you guys want to be looking at is if you're talking about institutional money, we want to be looking at the weekly chart, the daily chart, and possibly the 4 hour chart. The reason why you wouldn't look at, say, the 2 hour, the 3 hour, the 2 day, the 3 day is because other traders aren't looking at those charts to make their decision. So if they're not looking at it, they're going to be seeing different things to you. And if they're seeing different things to you, they're going to be making their decisions based on different levels, on different price action. And if you're not trading the exact same way as big money, or not trading the exact same way as the entire market as a whole, then you're pretty much trading against the market. It's like going out to a soccer match, right? And you're looking at the 3 day where everyone else is looking at the 1 day. So the 1 day team has a full team of 9 players, and the 3 day team is just you, yourself, and your neighbor. Like, it's going to be very unlikely they're going to win the soccer match having 4 or 5 players down.
Appreciate it. Thanks, John.
All right. Is it no more questions? All right. We'll keep going. Thanks, John. Appreciate it, mate.
No, thank you, Mr. Matt, for all your explanation. I would really want to know how do we apply the invert hammer? I don't know if it's the invert hammer, the morning star, and the evening star. I think they both look very similar, but how do we use this in a very good charting, or in a very good chart of interpretation?
So give me a second. I've just lost my PowerPoint presentation. It's gone away. 1 second, mate. So let me just bring up my screen again. So you should be able to see my screen now. So mate, with so you're going to go through the course. I know you are, mate, but just quickly at a high level, the morning star and the evening star. So two similar candles, but two very different meanings, right? A morning star, you should be looking at that as at a key level of support, right, for an indication that the price is going to start moving in the opposite way. Basically indication that there's a reversal in the market. So if we're in a downtrend, the morning star will indicate that we're going back into an uptrend. Opposite to that, so is the evening star. If you see this at a level of resistance, that's where you would indicate that the price is now going to start moving back down, right? So they're really easy. Once you start to pick them up, you'll see that they're just 3 candlestick formations. You just look for them at levels of resistance and support, and you should be able to pick them up pretty quickly. I'll send you a separate link, mate, on inverted hammers. I've got a link that explains it quite easily, and I'll share that later with you.
Okay, thank you.
No problem. All right. Now, sorry, Warren, can you mute whoever's that is? Awesome, thank you.
Yeah, real quick, can I also get that link on the hammers, please?
Yeah, no problem, mate. I'll put it in the chat group later on.
Awesome, thank you.
All right, so now everyone can see my screen, right? Yep, I assume.
Yes.
Great, thanks, mate. So just quickly for everyone now that's on the call, quick overview, 5 minutes. Going to run through what MBA is. Everyone from Crypto University, Warren's obviously heads up that for MBA. Speak to him if it's something you're interested in once I go through it. Everyone out from, say, the Altcoin Investing Group or the Empire Chat, let me know if you want to get some more details about MBA. But just at a high level overview, what we do in MBA, and I'm going to apologize that it's a looks like it's on a slant at the moment. The whole entire system is being upgraded. The website's being upgraded at the moment. It's going to be amazing once it's all done, but everything you need is still in here. We've got our own private Discord channels and our own private Facebook groups. And the idea behind MBA is we're a community and a course that basically empowers you to trade for yourself, right? You don't have to rely on signals, trading bots, all the rest of the crap that comes with it. The objective here is to turn yourself into a trader and your own bot system, right? We go through the basics. We teach you how to use TradingView. And then like we just spoke about, we take you in a very structured manner where if you're a beginner and you don't know anything about trading, and I'll be completely honest, 12 months ago, I knew absolutely squat about trading, leverage, how to read the market, TA, all that sort of stuff. I joined the NBA after waiting, I think it was 3 years. Since 2017, I hadn't joined. And then we went into COVID lockdown. I'm like, yeah, let's just jump into it. What's a better time to learn than when we're in lockdown, right? There's nothing else to do. So the idea behind the course is it really takes you through the basics of cryptocurrency. What is it? A lot of people buy crypto. They've got no idea what the hell they're buying. They're just like, yeah, we'll buy crypto. Should know what you're buying. Next, we go through support and resistance, like we just spoke about, then candlestick analysis, so what we just spoke about as well, and market structure, higher highs, higher lows, what we just spoke about. Then we jump into continuation patterns, reversal patterns, Fibonacci, which is an amazing tool once you learn it, Elliott waves, indicators, so RSI, MACD, and Bollinger Bands, and 3 really, really key things that every trader should know, anyone that's juggling around the crypto market: risk management, understanding risk to reward ratios, understanding the fact you don't need to win every single trade to stay profitable, trade plans, identifying what type of trader you are, and what works best for you. And then another big one, like John was saying, psychology, right? The market and crypto and trading in general, in any type of market, psychology is key. If you can't manage your psychology, you're just not going to win. Something I fell into when I was in the early days of trading, where I knew what I was seeing on the charts, I knew it would play out, my psychology would tell me otherwise. However, with experience, you definitely overcome this, but it's something that you need to understand and wrap your head around as to why. Then we go through entries and exits, like we're saying, confirmation, looking at trading setups like double tops, bear flags, bull flags, support and resistance, when to enter, when to exit the market. And then we also take you through futures, so how to use the futures market, how to use spot trading, and understanding the correlation between altcoins and USDT and Bitcoin. So a lot of people go, oh, why are the altcoins drop when Bitcoin's dropping, right? If you don't know that reason, probably shouldn't be trading. Probably something you should definitely learn. Then to top that off, we also have live sessions. So we have live market scans about 7 times per week. 2 during this time right now for the overseas folks, like the US and stuff like that. It's usually at 9 p.m. your time, it would be, Warren. But basically, every single one of those live sessions is recorded if you can't jump on it. Everyone lives a different lifestyle. You need to cater to that. And basically, each one of those live market scans are uploaded within the hour, so you can watch it in your own time frame. But all the information is here, guys. It's my internet. The videos are there. Don't think they're not. Just my internet playing funny games. Then I'll just quick overview. This is our Discord channel, right? So, I mean, everyone knows Discord's really popular in crypto. But basically, the idea behind our Discord channel is it's where the entire community is. We share a lot of information. You speak to other students, other traders, ask for feedback, ask for support. We also have an alert system from the coaches, so you can see what they're trading, what they're charting, and a whole bunch of information pops up through there. A heap of educational stuff, and just a whole bunch more. We also do a lot of motivational and fitness activities and stuff like that. Again, that key piece of the psychology, keeping your mindset healthy, right? And one of the biggest things I wanted to cover off was, we are not the type of group where once you sign up, no one gives a shit if you succeed or you don't. The point of it is we want to hold you accountable for what you're purchasing. We want you to make sure you're successful at what you're doing. And that's where we have homework. So at the end of each lesson, there's about a 10 to 15 minute homework exercise. You do the homework. It gets ticked off. It gets marked by one of the head coaches, Charmin, and it gives you really good feedback to make sure what you're learning, you're then able to apply. There's no point learning something if you can't apply it. So that's just a quick rundown of MBA. If you want to ask any questions, reach out to Warren or myself. We'll be able to teach you, go through anything with you. So on that note, let's jump into the charts. Any questions before we jump into this?
Yeah, one right here, Matt.
Go for
Thanks
it.
for showing that. Thanks for showing the whole website there. So you said regarding the homework, right? So if like if I'm in the US and I'm on a different time frame and I'm watching the videos, like the recordings, will my homework still get checked, right? Because I guess I don't know if that gets checked like live, or they just look through all the submissions no matter what time they're submitted.
Correct. Yeah. So with the homework, mate, it doesn't matter what time you submit it. It can take up to like 3 days to be marked and gone through. So Shamim will go through all the comments in the homework section, and he will reply back with feedback and everything else to it. So it doesn't matter when you do it. The homework's all correlated to the course itself. So not the live sessions, but the trading education as you go through it. At the end of the lesson, they'll tell you what homework to do, where to submit it, and then you just chuck it into here and it'll get marked.
Gotcha. One more question. Sorry about those the training videos. Which ones are the newest ones? I guess because there's a bunch of them, and I see that the topics are like they're covered. Yeah. So I'm just wondering, where do we start? Do we start from the bottom ones? Are those the most recent?
Yeah, correct. So there's 3 sets of lessons in here, or courses. They're all relatively the same. However, the most recent one is the 3rd set. So down the bottom here, right? The reason there's 3 sets is the guys would record this live every year. So the information slightly may change, but overall it's fundamentally the same. It's just better to watch the most recent ones, and they're down the bottom.
Gotcha. Yeah, I was wondering because I was watching one where they're talking about BTC being like 10K. I'm like, oh yeah, that must have been a while ago. So.
No, that's fine, mate. Sorry if I didn't make a mention of that to you. I thought I sent you that note. Apologies, mate.
No worries. Thanks.
All right. So wanted to go into Bitcoin now if there's no other questions. Bitcoin's obviously the hot topic, so everyone should be able to see my screen now. On the charts, basically wanted to highlight what we just spoke about in the TA overview, right? So what we can see here, this is the daily time frame. So the best thing to do when I trade, or what I do when I trade anyway, is I always look at the daily chart first, like John mentioned. So I always look at the daily chart first. From there, I draw out my daily resistance and my daily support, okay? Then what I usually do is I'll identify the market structure and then draw out my trend lines and see anything from there. But I also then drop it down to the 4-hour and check my support and resistance levels. Now, sometimes your support and resistance levels may be the exact same as your daily, all right? So if it's not there, don't force it. Clear example here, the daily, this is now the resistance, but the daily 4-hour resistance was exactly the same in that situation. So you don't need to go looking for it again. But the thing I wanted to identify here is, this is when we had that really big drop in Bitcoin, right? And everyone was freaking out. Oh my God, the market's manipulated. Oh my God, the market's crashing. Why is it doing this? Why aren't we going back up? If you knew how to read the market, it's quite evident that we were going back into a downtrend. Okay, now the reason I say that is, if you look here, we just had pure good market structure. We're in an uptrend channel. Okay, you've got the higher highs, the higher lows, the higher high. However, what happened from there is we started to produce lower lows, right? In this situation, we broke through the long-term uptrend, the trend line, until basically then we tried to push back the market or push back up again, and we'll get into this point of squeeze. So the daily resistance level around that 60K mark, 58,000. Now, we actually failed to produce a higher high to indicate the fact that we were going up again. And this is where people were getting caught out, or got caught out, because they're like, oh, now the market's recovering. We're going to punch through 60 again. We're going to keep going. It's going to be fine. Now, what happened in this situation? We didn't punch back through. We didn't produce a higher high as we were anticipating. We actually produced a lower high, after producing a lower low, which is actually a great indication that we're now that we're starting to form a downtrend channel, right? Now I'll just backspace these because I want to go into a bit more detail. But if you zoom in here on the daily, you'll be able to see as we got to that squeeze, an evening star formation at a key level of resistance, at a point where we're producing a lower high, at a point where we're getting to a squeeze. What do we say? That is a great point. You've got 1 confirmation, a squeeze, 2, 3, we're getting at the point of resistance, we're failing to break through, we come back down. Probably a good indication that there's a short on the cards, right? And that we might not push back through and back above to produce that higher high, right? So this is where a lot of people got caught off guard because they're like, oh, Elon's tweeting, he's going to make the market drop. There's no doubt Elon tweeting is a nightmare and it just stuffs up the cryptocurrency market. It makes it look like a mockery. But the reality is we were never going back up past this level of 64,000. We were stuck at this resistance level before breaking through the long-term trend line, which we had already done once. And that would have been your first point to go, oh shit, we might not be going back up here. So like I was saying earlier, it's about predicting the story and reading the story as we continue to look at the chart. So you know the start, you know the middle, it's now predicting the end, right? Now, this is where I wanted to run through this piece. This is where I was saying earlier, buying the dip doesn't work. And I mean, 9 times out of 10, I don't like buying dip. I think it's a stupid strategy. Because when you go into situations like this, a downwards channel, people keep buying the dip in the hopes that it's going back up and they get caught out, right? Now, the reason I say that is what's happened here is, say for instance, you've purchased the dip here now that we're in a downwards channel after that breakout. You've purchased here, you get really excited that we're going back up because the market's moved in this direction. Now let's just get back. So say you've purchased here on the dip because, oh yeah, we've got buyers, we're fine, we've got the long wicks at the top, no worries, we'll buy the dip. The market goes up slightly. You get really excited because you think, yep, I've done the right thing. The market dips down again. Why? Because we failed to produce a higher high. Again, the market never cleared this previous structure to indicate that we're going back up again. But everyone got excited, everyone bought the dip, and then the dip kept going. Again, we pushed up here, and now at the trend line where the channel connects, you've got an evening star formation at a level of resistance. As we get to the squeeze, similar situations previously, the dip occurs again. People buy the dip again, right here. What happens? Price comes back up. We fail to produce a higher high. We get another lower low, lower high. Price comes down again. People buy the dip again. Gets squeezed. Price comes down again. Clear indication here, if you can't read the market, buying the dip ain't going to do shit. Simple as that. Any questions?
Yeah, Matt, me again.
Go for it.
Another quick question. I know you mentioned before that you use leverage and you just do short trades. So if you're like leveraging and you're doing a short trade, wouldn't buying the dip in this case work out? Let's say you buy that first dip, right? After that first lower high, right? Right there, yeah, right where you had your arrow. Let's say you buy that dip right there, and then you just use leverage and trade. What is that, like that's a daily candle. So during that day,
these are 4 hours.
Sorry, yeah, didn't say that. So right. within 4 hours, I mean, you could probably make a ton of money on one of those dips, right? If you use leverage and you just get out of it really quick.
So the way I would be trading this from a leverage aspect, and it comes down, like John was saying earlier, risk to reward ratios, right? You don't want to buy in no man's land. So say if I was to buy here, the risk goes out the door, right? However, if I was to buy here, as we got onto that squeeze, my stop loss would be here. My previous take profit would be at this level here because that correlates. Let me just move this to the side. But you'll learn all this, mate, anyway. But I would purchase based on the confirmation of the evening star. My stop loss would be above the structure. Okay, so just in case we push back up. And my take profit technically would be at the 40K resistance level. So down here. right? So that would be my first take profit level. Why? Because that's a key point of resistance. You can see the candlesticks are breaking. If I wanted to get greedy, I would definitely start putting it down here at that 40K level. However, me usually I played a little bit more conservative. And that would be your shorting opportunity. That's where your risk to reward ratio is at 3, right? Whereas say if I was to buy up here, your risk to reward ratio is basically at 1, right? Because you haven't got that indication yet which way we're technically going. You want to wait for the confirmation, right? That's what we were talking about earlier. And this would be your confirmation to short. In my opinion anyway, right? That's the way I would be shorting. Does that make sense?
So
Does that help?
Yeah, it does. Thanks. So I guess you wouldn't do something risky like, for example, if you see up there and you see your first lower high box, right, in the upper left-hand corner, and you got that first really long red 4-hour candle, that like the first big like drop, right?
This one?
Followed by a green hammer.
Yeah.
Would you try to catch that dip on the bottom of that green hammer and ride it back up?
No, because there's no confirmation that you're going to break up. And you'll start to pick this up. Like, I'm taking this really basic, but if you start to apply things like fibs, like Fibonacci onto this, you'll start to understand why. I don't want to do that now because it'll start to blow people's minds and it'll just get a lot really intense. So I want to keep it simple. But like saying, if you were to buy here, for instance, in the hope that it's a long, your risk goes out the door completely, right? There's just no confirmation as to why you should be buying that dip, right? You want to wait for that level of confirmation, the indication that you're pushing back up, and you haven't got that yet. So that's why, and I mean, personally for me, Boris, the way I trade is I mainly trade the 4-hour time frame, right? Because my objective, the reason I started to trade is because I wanted to make money whilst I was sleeping. Simple as that, right? That's why I learned to trade. Now, for me to make that work, I can't be trading 1-hour time frame, 15-minute candles, stuff like that. I prefer to trade the 4-hour, put it on while I go to bed. The trade plays out, either my take profit gets hit or my stop loss gets hit, and that's the end of the story. I'll wake up, I'm in profit, I move my stop loss into profit and just let the trade run, right? So identify what sort of trader you are. You come to do that when you do your trade plan.
Yeah, that makes sense.
Cool.
Thanks.
All right, so that's downwards channel. That's why I don't like buying dip. That's what I don't look at. An example of, so this is Bitcoin at the moment, right? Now we can go through Bitcoin right now, and then we'll start punching out some altcoins for the next half an hour or so. Basically, I took a trade on Bitcoin the other day, taking profit, I think it was about there. No, sorry, I lied. My profit was at 39 from memory. But basically a really good opportunity here, because what I did is I was pretty confident. My risk was a bit higher, but I was confident we were going to play out the way we were. I was looking at what was known as a head and shoulders pattern. Now, it's not the greatest looking head and shoulders pattern, right? However, for me, it was okay and it worked. But then I looked at it a little bit differently, okay, because I looked at it on the 1 hour. It made sense. And I decided to go along with the head and shoulders, right? Now, the other way I looked at this is I looked at this as a bull flag. Now, many of you may not know what a bull flag is. Basically, you've got here a number of key points of confirmation that the market's going to break back up, in which it did. Unfortunately, I didn't jump on the morning star down here, traveling for work, stuff like that. Just didn't have an opportunity to jump in. I don't like to chase trades. If you miss it, you move on, you wait for the next confirmation, then you jump in. There's no point just hoping to jump in at the right time. So I waited for this to play out. Now, by waiting for this to play out, what happened is we had a nice bull flag form. So that's this here. That's the flagpole. Whoops, that's really bad drawing. But basically the flagpole formation, okay? Then you've got the dip, which is the flag. And this is known as a bull flag, okay? So what I did here is I waited for the breakout of the bull flag, which was that green candle on the 1 hour. Then this hammer end was on the daily close, So the daily close, just as that hit, that hammer formed. That was enough confirmation for me to jump in. We've got the bull flag formation. We broke through the trend line of the bull flag. We then had the confirmation above the daily close, sorry, the daily support, sorry, daily resistance. And I purchased in based on that hammer, right? Now, on that trade there, I was pretty confident in the fact of where we were at. I had my take profit, like I said, it was originally around 39, because that's the tip of the bull flag here. So that's where I put my take profit. And my stop loss, whoops, changed tool. My stop loss was here from memory. No, wait, sorry, let me get it up. Yeah, it was about there. I was on 30x leverage. So basically with this trade here, ended up cleaning up about 110% profit, right? Now, I didn't jump into it. I didn't rush it. I waited for things to play out. I missed here. I didn't FOMO in, anything like that. Although, like, look, I could have purchased here and things could have been even better. That didn't fit my trade plan, and I don't buy, as you basically say, in no man's land. I wasn't going to buy here in the hopes that we're going to move either way. So waited for the trade to play out. Patience is key, and then the market moved in the direction that we hoped for. So let's get rid of that. Let's focus on what the now is. And then we'll start running through some altcoins. So right now on Bitcoin, what I'm waiting to see, and as we were speaking about a little bit earlier, is I want to see what closes here, okay? What I'm looking for in particular is I want to see a Morningstar formation like we just spoke about, right, in the presentation. So you've got the bullish, sorry, the bearish candle, the bit of an indecision, a bit of a doji happening there. I want to see a Morningstar. So for a Morningstar to be valid, and this is the key piece where we talk about validation in TA and why people go, oh, I just learn off YouTube. And it's like, yeah, good, go learn off YouTube. A Morningstar formation to be valid, you need this green candle to be 60% of the size of this red candle. Okay, if you only see it to be down here, for instance, at 30% or 20% of this big red candle, then it's not a valid Morningstar formation. It's as simple as that. So right now, I'll wait out the next 2 hours. I'll see where this goes. I'm not in a trade right now. However, if that holds, then I'll be looking for a long position. Okay. Again, the risk to reward ratio with this probably isn't the greatest, so probably wouldn't suit my style, but I'll reassess as the market goes on. If I want it to be a bit more conservative, I'll just put my stop losses here. But again, that's not the best way to put it. You want it below structure. Structure is there. And then I'll just basically be hoping that we're going to retest 40K again, but that's not my style. So just waiting to see what the market is doing. Potentially what I'll be looking at instead, if Bitcoin stabilizes within this channel, so say we do something like that, or we just fluctuate between this channel for a little while, that'll be a good sign to jump into some alts and get some longs in. So typically when the Bitcoin stabilizes, you usually see the altcoins start to run a little bit, but we'll go into a little bit more detail on that. So one thing I wanted to actually show everyone was Bitcoin dominance. So I'm not too sure how many people know what Bitcoin dominance is, but one thing I was looking at in particular was the weekly of Bitcoin dominance. This is what I wanted to show. So Bitcoin dominance basically represents how much money is in Bitcoin versus the altcoin market, right? And typically when Bitcoin dominance is falling, it's either a lot more money is pouring into the altcoins versus Bitcoin, or the opposite to that. If Bitcoin dominance is falling, is rising, then a lot of people are either taking profits out of the altcoins, and a lot of people putting money into Bitcoin, basically, or basically everyone's just pulling money out. But if you look left over history, and this is what TA is utilizing historic price action to predict future movements, okay? Now, in this situation here is, last time we hit around that 40 BTC dominance here, we then had the pump back up. That's where the altcoins bled at that initial phase and then came all the way back down. So we did the same thing. When we hit that 40, we saw that massive drop again across the market. We popped back up, nearly hit that 50 like we did previously. And now we're starting to come back down. So I'm looking to see if this same movement occurs. All right, it's something that I'm watching now. This is the weekly candle. So this is over the course of 3-4 months, roughly. However, it's something to be cautious of and just something to take aware of. Something that I'm watching at the moment, and just want to make sure people are aware of that and understand. If you don't know what understand BTC dominance is, I have an article in it in my group, the Empire Trading Group. Warren can link into it or copy and paste it in his group, whatever, don't mind. But it does highlight how Bitcoin dominance is relevant to the market and something you should understand. In saying that now, let's punch out some altcoins. I know a lot of people.
You want to go over
Oh, sorry.
Ethereum? You want to go over Ethereum real quick?
Everyone wants to go over Ethereum, don't they?
Yep. Well, I've been looking on the 4 hour. Wanted to see your perspective. It looks like it's kind of maybe, potentially doing like an inverse head and shoulders.
Yeah. All right. Sweet. Let's look at Ethereum. I know XRP is a big topic. Look at XLM. If anyone's got any others, just post them in the chat group and we can start punching them out. We'll go through about 5 or so. Then we'll close things up. So Ethereum now, guys. Things I look at now. Let's go. That's on the weekly. That's why it looks shocking. So the way I sort of look at things here is, and depend on how you trade the altcoin market or what you're looking at. I typically look at the ETH BTC chart, or I look at the alt BTC chart, because if you're hoping for, or if you want a coin to rise in price, or you think it's going to drop in price, you really need to take into consideration what the alt BTC chart is doing, not the USDT value. I mean, the USDT value is important, but however, the SAT value of an altcoin is what's going to determine its value at the end of the day, because the SATs is what Bitcoin is valued in, right? And the altcoins are valued in comparison to Bitcoin. It's as simple as that. So when you see the market going, oh, yeah, Ethereum's at 4.5 grand and so forth, that's fantastic. However, what everyone noticed, and I've been saying it for ages, is the alt market was so overvalued when you look at it historic wise, right? The Satoshi value of, say, Ethereum, I have to double check Ethereum, but a lot of the altcoins, the SAT value is so low compared to what it was in like 2018 and 2017 versus what it is today. And a lot of these altcoins are just pumped up on the back of Bitcoin's all-time high, right? Because Bitcoin was valued at like 50, 60K, these altcoins were so high in the sky, basically. As soon as it dropped, you saw some of them drop by like 70%. And that's why they're struggling to make those all-time highs again, because their SAT value is so low and Bitcoin's 25 grand less, right? So that's a direct correlation. So the way I see this on ETH now, this is the ETH BTC chart. Again, people were like, oh, ETH's going to keep going. ETH's going to keep going to the moon. We were doing really well with ETH, right? Great market structure all the way up. Now, you know what? I'll wipe this out for everyone. I'll show you how I chart this. Okay. Now, for this in particular, I would go and draw, I'll switch to the daily, and I'll draw out my support and my resistance. So we'll go through this in detail. Firstly, you can see that there's market structure down here. So I'll just draw that out. So then I've got that covered. Definitely some market structure there. You can see that's a key level of support. And there'll definitely be a resistance level right here, which would obviously be support at some stage or rather. Now, what I would also do here is, and I mean, guys, this is the way I typically like to analyze my charts, is I use fibs. So Fibonacci is a tool to help you identify key levels of support and resistance so that you can jump in and out of trades. Best used on an impulsive move. So in this point in time, I'd be drawing up my fibs to identify the change. Now, I usually play around with this a little bit to make sure it's accurate, because you want to make sure it lines up with everything. So you can see there, That's where the change in market structure is. Where you look left, you can see we broke out. Okay, that's where I'd be putting my fib chart, and now I'd be breaking that down. Now, what I like to show you here is, before even marking these levels out, and this is where I tidy things up, you can see that it's helped me to identify my key levels of support and resistance, right? It finalizes everything for me. It makes it look all nice, neat, and now it looks structured, right? If I break this down into the 4-hour, that's where people's minds start to get blown. Without even diving into the 4-hour, now I've got my support and resistance lines all drawn up. Just a matter of writing these out now. So 4-hour support, 4-hour resistance, another 4-hour support here. This is the previous, obviously, and so forth. Now, thing with Fibonacci, and you'll start, if you learn this properly, the 0.618 on fibs is a key level of retracement, okay? And you can see here, the price basically dipped, and although we broke through that 0.618, which it happened, it is what it is, once we got back above, that's where the price started to hold. We then started going back up. And the simple analogy with Fibonacci is, if you look at it from a sales perspective, right? If you were to buy something, or say a new item got released, let's say the new iPhone got released and it's a stupid price like it is, like $3 grand, $2 grand, whatever the hell it is now. If it went 23% off, you'd get some buyers. If it went 30% off, you would get, or 38% off, you get a lot of buyers. If it went to 50% off, you would have people lining up at the door. If it went to 61% off, you'd have chaos. People would be buying it left, right, and center to get their hands on it, right? It's exactly the way fibs works. The price is really high, psychology levels, 61.8 is a really good buying price, or a buying discount, let's say. Buyers come in, go straight back up. Rule of thumb for Fibonacci is if you buy off the 0.618, your typical take profit level would be the 0.23. And to a T, it happened. It's about learning how to identify this. It's as simple as that. Okay? Typically, you'd get people go, oh, the price is going back up, back up. Price ain't going nowhere. You got resistance levels, failed to create the higher high. Price comes back down again. It's about reading the story. So for fibs right now, for ETH right now, I'd be watching to see this 4-hour candle close for my trading strategy, because what that would indicate to me is that buyers are still strong. We tried to break through the support level. We did. However, on the retest, we popped back up. We should then be in a good position for a long, like this. Now, my typical risk to reward ratio needs to be 2. So for me to trade, probably not the best one for me. However, I'll just be watching this, because what this could indicate right now is this. Where are we? This was just a high, because that matches up with here. This would be a higher low. And a higher low. So again, we're starting to get that change in market structure. Now we just need to wait for confirmation on that first. The other thing I wanted to note on ETH here, the one thing you need to take into consideration if you're trading larger timeframes, right, is this. Okay. So if you look at the trend here, let me get rid of that. In this situation, this is going to be a level of resistance, okay? And if we fail, you're going to constantly get squeezed, and then this will happen if we break down. So just got to be careful. especially when you're going long, when you haven't got full confirmation or you're not in a long position, you just need to be mindful of these trend lines that are occurring.
So what do you think about on there, Matt? I know that there's some people out there in the Twitter and YouTube sphere right now who are saying that this could potentially paint like a inverse head and shoulders. Do you see that at all here on ETH?
Look, the way I would be trading this, like, I mean, you can definitely see that there is somewhat inverted head and shoulders here, right?
So Matt,
It's not the
sorry to
prettiest
just
looking
cut you
one though.
off.
No, go for it, bro. Go for it.
So there's just a couple of people that has messaged me saying that they can't get into the room at the moment.
Are they waiting in the?
Yeah, in the waiting room. Oh, my camera's off.
You're all right. Warren, can you see anyone in the waiting room?
Oh, okay, cool. Well, that's fine then. But in terms of head and shoulders, so the key rule of head and shoulders is always head and shoulders is a reversal signal, which means a change of the market structure or the change of the market conditions. So you want to see head and shoulders at the very top of the range. And in terms of inverted head and shoulders, you also see it at the very bottom of the range. So sometimes people see something that may look like head and shoulders, but really it's not quite head and shoulders until it fits the rules. You could just see it as a change of market structure, a lower low, lower high, lower low, lower high into a higher low, higher high. And then you can see that as a possible change in market structure, which may look like head and shoulders. But as a trader, you always want to be looking at either the very top of the range or the very bottom of the range. That's why it's called a reversal signal.
Yeah, I appreciate it, John.
Good point.
Yeah, I know that there's a lot of people out there that are, obviously, because everybody still wants to be a bull, in the current market, want to see, $100,000 Bitcoin and $20,000 ETH or something like that. So I just like to let people see it against the rules so that they don't get caught up in the hype.
No, it's fine, man. And you got to remember, a lot of people, see, I've got my chart drawn up. A lot of people ended up getting stuck in this situation, right? Similar to Bitcoin, like we were talking about earlier, is you got your higher highs, higher highs, higher highs, higher lows. Great market structure, right? If you're buying dips in that sense. Again, we break the long-term trend or the trend line on the way up. We produce the lower low. We go to punch back up and we fail, right? That people get caught out in this lower high and this momentum that, hey, we're about to punch through that resistance level. We never get the confirmation we're going anywhere near to punch through that resistance level. Price comes crashing down again. You've got bearish pennants forming. Price comes down to the exact same level. So with bearish pennant, you measure the pole. Target's there. You've got the demand block when you look left. That's where price held initially. Again, failed to produce a higher high. We've produced another lower high. And then price keeps going down. Right, and this is where people, oh my God, buy the dip of ETH, buy. Guys, this dip ain't finished yet. And like when you look at it from a price perspective on the 4 hour, I mean, there's nothing right now to say, hey, ETH's going to start going back up anytime soon. And I mean, the way I'd be looking at this personally, excuse me. You break the trend again. You start coming back down, we break through, go push back up, fail, price starts coming back down again. Now, you just got to wait to see how, like, personally, again, you're in no man's land. If you're trying to long or short this, you're going off hopes and dreams. You've got a lot of risk to the bottom for a really short-term gain that's a resistance level. So I hope that helps.
Yeah, totally.
And also, Matt, could you jump onto YFI BTC or YFI USDT?
YFI?
Yeah, YFI. I'm pretty sure. Just so I can show you like a textbook. No, Y.
Oh, YFI. Okay, sorry.
Yeah.
Oh yeah, I forgot it already. Do you want BTC or USDT?
I think both the charts will be the same. They'll look roughly the
Okay.
same. So, and I'll show you guys a perfect example of head and shoulders on the daily. And we're just going to go back to the start. So to the left.
Oh yeah, this is golden one.
This is the textbook example of head and shoulders. I'm just gonna quickly draw on your screen. So
Go for it, bro.
we want it to be on top of the range. So this is the top of the range as we're going up, as you can tell already. But the other thing you want from a solid head and shoulders is ideally you want a solid horizontal neckline. And then you want, and this is the psychology behind it as well. So you have market push up, creating the higher high, higher lows, higher highs again. And then you're gonna come down to the neckline and then have this push up, which then generates the lower high. And then this is the sell-off that you have, and this is usually considered as the recovery phase, and then it will form the head and shoulders. However, head and shoulder patterns isn't confirmed until it breaks the neckline. So if you were a trader, you would either be entering on here using fibs from the top to the bottom and having that as about your 50% area as a possible entry. Also, because it also lines up as a key level of resistance in the past. See, prices come up here before, pushed down heavily before it broke through. Now it's back under this strong level of resistance again. So you could have your first entry here. As a trader, we never find the top. Traders don't predict the top. We react to the market. So if you hear anyone saying that, oh, Bitcoin's going to 100% go to XYZ or SafeMoon's going to go 100% to XYZ, they're not really a trader per se, because trader reacts to the market. You have no idea what institutional money is going to do. So we would have missed this completely. That's not something we aim for. We aim for this secondary phase of the movement. So that could have been our first entry based on multiple confirmations. And the next entry could have been the simple break and retest of the neckline. You can't see the retest very well because we're in the daily, but on the 4 hour or the, sorry, let me clear off all this stuff. On the 4 hour or the hourly, you will be able to see a clear retest that does that. And then our second entry is there. So our first entry could have been here as a trader. Our second entry is as a trader could have been here as well. And our take profit is usually always at key levels of support or resistance. And in this case, we also have a supply block that runs across there. You see, as a trader, we don't find the tops and the bottoms. As a trader, we capitalize on reactions of the market. We may not catch every single move. We may not catch the very tops or the very bottoms, but the trades that you want to enter have multiple confirmations to make it a safe trade. This is the difference between a trader and a gambler. This is also a difference between an educator and an entertainer. Someone on YouTube is an entertainer. They get paid for clickbait. They get paid for ad revenue. They get paid for products. So the easiest way to check if someone is legitimate or have any experience is jump on their YouTube channel or jump on their Twitter account or jump on their Instagram account and check if they even had any single post prior to this bull run. What you'll notice is a lot of their crypto posts or a lot of their coin posts or a lot of their analysis posts came after the bull run or came after the start of the bull run. And that's just their way to generate revenue. If you do find someone that's been posting consistently throughout 2017 towards 2020, then you understand that they're a trader, because no one's interested in cryptocurrency in the bear market. So they're creating content to educate. But if they're only creating content after 2020, or just before 2020, then you know that they're an entertainer just trying to get ad revenue.
100%. Very good points. Very good.
Yep. And I mean,
Sorry,
that too, I mean,
yeah,
I would say that even for myself, like back in 2017, you know, when I was 2016 when I first started getting into Bitcoin, but 2017 when I started a group and, you know, was trading and trying to learn it all, you know, just like everybody else was. But, you know, the whole thing was that, you know, if I get on there and I listen to, you know, the latest YouTube channel, or I catch a tweet from somebody I think that's an experienced trader or whatever, you know, and you really don't know because you don't have a relationship with these people. You're just watching their content. But if somebody tells me, hey, guess what? You know, ETH is going to go to 10K or ETH is going to go to 15K or 20K. Like for me personally, do I believe that it's going to go to those levels? Sure. But the question is at what point is it going to go to those levels? And, you know, will you buy now based on somebody saying that, hey, ETH is going to go to 15K? Well, let's just say you bought it at, you know, 4,500. Well, now it's at 2,500. So are you going to be able to, based off of what that one person told you, if you have absolutely nothing else to back it up or understand how to read the charts, are you going to be able to weather the dip of when you just lost 50% of what you initially put in the market? Are you going to go back to the guy on YouTube, say, hey, what the heck? You said it was going to 15K. how are you going to explain that to your wife when she says, sell that shit right now because you're crazy? You know, I mean, it's like you still have all of that is very real. So, I mean, you know, trading crypto, trading anything, there's that other dynamic and perspective that you have to keep in mind. And so, I mean, when you can sit here and look at these patterns and be able to appropriately put your stop losses in, you know, and have risk management, then, you know, if you get it wrong, you get it wrong, but you don't lose much, you know, and it's not just somebody telling you, hey, it's going to go to 15K. Of course it will. It might be, you know, 6 months from now, could be 3 months from now, could be a year and a half from now, or 3 years from now. But, you know, can you weather the storms in the middle? So that's why I think all of this stuff is extremely important, you know, specifically for new people that are getting in, but even for seasoned people that, you know, maybe they know 50% of what we're talking about, but still, you know, get caught with weak hands, you know, selling some of these big dips and sell-offs and stuff when trading algorithms and everything else are trading exactly what we're talking about. So anyway, just throwing that in there.
Hey, that's a great point. Thanks. I was one of those guys, actually, the Ethereum guys. So I bought that first Ethereum dip, right? I think it was like around like 3,400. So I'm pretty much holding the bag right now. And, you know, so I'm just thinking, should I kind of like down cost average and try to catch a short ride back up and kind of break even? Or I guess just the chart that you guys just showed on Ethereum earlier, that was huge. So that'll be a big help. But I'm just trying to kind of decide right now. I'm obviously not gonna dump it at a loss. That's for sure. I don't care if I have to wait like a couple of years for it to come back. But I'm just thinking if I should like you know, catch the next dip, maybe down cost average, and then ride it up a little bit just to kind of break even. And then, you know, I'm trying to decide that right now. But that's fun you mentioned that about the Ethereum guy, you know, that bought it at one of the highs. I mean, I didn't buy it at the high, luckily, but I bought it at the first dip, which I thought that was the last dip, but I was wrong. So I guess I gotta wait now.
Yeah, sometimes there's a dip to the dip to the dip, and then one more dip. So
yeah, the simple analogy there is don't catch the falling knife. Wait for the change in market structure, then jump in. Especially if you're buying from a spot perspective, right, where you're just buying that lower price and hope that it's going to back up. It's a different situation. But Warren, you raised a really good point, right? The psychology piece is really difficult for people when they see things dropping 50, 60%. I mean, in the Bitcoin, the crypto market does it in the blink of an eye. It's it really stuffs around with people's psychology, and whether or not they can ever actually weather that storm is a different perspective. And I mean, I had a lot of people messaging me, I just sold everything at 70% because everything just tanked, and then the market retraced back up 40% instantly or 30% before I took another dip, and they're kicking themselves. But yeah, that's why we say, guys, we're not here just to go, hey, buy a course to sell. If we didn't believe in it, we wouldn't tell you guys, hey, do it, right? It makes complete sense. I'm a perfect product of it. I knew nothing. I got into it. Now I manage my own team, right? And support my own team, which is fantastic. And John does the same, and a couple of other guys on the calls do the same. And again, we all started off with zero knowledge, right? It's just about education. It's like anything. You can't expect to succeed at something if you don't know what it's all about. Anyway, I want to run through XRP quickly. ADA as well, because ADA is obviously a hot topic.
Sorry, Matt. So just
go.
Just before we continue that, I'm going to share something with you guys. And if this is the only thing you take away, I promise you that this entire call will be worth it. Like Matt's dropped a ton of value, Warren's dropped a ton of value. The chat's absolutely going off as well right now. But if this is the only thing you get out of it, this will save you a lot of headache and a lot of money. I'm going to teach you something that is very simple. It's probably the most basic thing that we teach in the course. And this is going to either save you a lot of money or make you a lot of money. So this is just an ongoing joke that I have with my students and my members, including Matt as well. So the first thing that we teach in the course, and this is also one of the first things that we taught during this call, is market structure, right? So we have a market that's going up. You can identify this easy. You look at the chart, you'll know straight away if the market's going up, down, or sideways.
Are you sharing, bro?
Yeah. Oh, it's not working. Let me share again.
No,
sorry.
let me cancel my share. Go for it.
So we have a market that's going up. We have a market that's going sideways. And we have a market that's going down. So if you don't understand anything about trading and all you want to do is quote unquote buy the dip, right? The first thing you want to do is identify market structure, like the way that Matt has showed you at the start of this video. So who can agree that when the market is going up like this, buying the dip is a great idea? So I'm sure the chat's going off. I'm sure everyone's saying that, yes, when the market's going up, we're buying the dip because it's going up, we're buying the dip. And then the market kind of goes stale and it goes into a consolidation zone or consolidation phase or sideways movement, whatever you want to call it. Do you think it's still a good idea to buy the dip? Not as great as when the market's going up, obviously, but it's still plausible. You can still buy the dip, you can still make money, you can still get in. But when the market is trending down, do we want to buy the dip? And I'm going to hope and pray a lot of you guys will say no, you do not want to buy the dip going down.
Oh no.
So guys, if you want to just buy the dip, by all means you can buy the dip, but learn to identify whether the market's going up, the market's going sideways, or the market is going down. So as a little joke with myself and the guys in the community is like, when the market's going up and sideways, we're buying the dip. When the market is going down, we're selling the tips.
Just the tip.
No, thanks, John. It's good.
Yeah,
it's
thanks.
good value.
Yeah. Hey, one of the questions that we had, I don't know you want to go over XRP, but maybe you could hit this.
Yeah, go for it. Go for it.
They were asking about stop losses, just basically like what that is and just setting one. You just hit that for a second. I think that'd be helpful.
Yeah, that's fine. Actually, I've got an example that hits home. Let me just find it. Where was it? I think it was here. No, wasn't there. But I think I've got another one here. 1 second. Sorry, I'm just trying to find the example that I had. Bear with me. This was it here. So on BAT, for instance, this is something I was trading quite regularly, played out perfectly to a T. This would be a great example for everyone.
Matt, just a quick one. You're not showing.
Yeah, go for it. Oh, whoop. Thanks, bro. Thank you. All right, there we go. Everyone can see it now? I assume so.
Yep.
So this is a really good example. This is BAT, right? And this will also show you what John was talking about, right? Where I was looking for a retracement. I was trading BAT quite regularly. Everything sort of was playing out exactly as I anticipated. You've got the bull flag, worked out perfectly. This retraced off the 0.61 fibs, so that handled out great. So basically trading throughout this entire channel, trading the uptrend. Then what I was looking for, I knew this was going to break out. Like I was watching this to a T. I'm like, yeah, we're going to break out. We'll be fine. Things are going to go well. And I'm from memory, and Jared's on the call. He knows because he was trading this at the same time with me. I purchased in on BAT. I'm pretty sure it was here. And my anticipation was with fibs, looking at fibs, where we're going to go, push the all-time high, so forth. I had my stop loss set really tight, and it was to a point where it was wrong. I mean, the way I sort of anticipated this, my stop loss should have been a bit further down. I mean, these are really long wicks. But in a nutshell, your stop loss should be below the previous structure. This probably isn't the best example. Let me have a quick look. Yeah, no, probably not the greatest example. Let me have another one. Where did I really find that Bitcoin one? The Bitcoin one was good. Yeah, this was it, sorry. So Bitcoin, for example, we had this drop here occur, right? And the way I was charting this at the time was I was looking for the change, the breakout of the pennant or the symmetrical triangle at the time. And I was looking for the change in market structure within that triangle and anticipating the drop all the way down. And I had got my short position, okay? Now, the way I'd structured this, and it was purely my stuff up, it's one of the biggest things I learned early on, or not early on, but when I was trading, and then I reached out to the team, like, what did I do wrong here? I'm like, something's not wrong, something's wrong. And what I did is I purchased when we broke through here, and I'm like, okay, well, we've got that big bearish engulfing, the change in market structure because we produced the lower low within the triangle. And I'm like, that's a great point of entry. I'm thinking we're going to break down. It's going, it's going, it's going. I ended up purchasing, I'm pretty sure it was after that candle. So there, right? So my risk to reward ratio was great. It was 3.19. However, I stuffed up because what I did is I put my stop loss way too tight. And the reason I put my stop loss way too tight is because I just wanted to trade a higher leverage. Now, I use a profit calculator to help me calculate my positions a lot better. But what I did is instead of targeting my stop loss, right, above the structure, above the symmetrical triangle where it should have been, okay? So outside the triangle, technically should even be a little bit higher. I ended up putting it within the triangle because I was just more hopeful that we're going to break down straight away, right? And instead of trading, say, 30x, I wanted to do 70x or 60x leverage. And I knew the trade was going to play out. In my mind, I knew this was going to play out to a T. And if I would have stuck to the plan and traded 30x, I would have done 300%. Instead, I got slopped out, lost my money, and then made nothing, purely off the greed of trying to trade a higher leverage, right? That is why setting your stop loss above the structure is important. Now, that goes for short or long positions. If your stop loss should always be above the previous structure. And you always got to look for the the channel, the blocks. Give me a quick example. Oops, wrong thing.
Hey, Matt, it also
it.
kind of sounds like, and I don't know if you have a screen for one of the exchanges pulled up that you use and how you actually set the stop loss. I guess that was actually the question. I thought he wanted to just see, where you're doing the stop loss. I think it's how to actually set the stop loss on the exchange.
Who's asking? Is that Sean who's asking that?
Yes, I believe so.
It is.
Sean,
it is.
I'll send you some details, bro. You should be picking that up in the course.
I went through the whole course and I just don't remember which video that was in.
All right. I'll send you some things separately, mate.
Thank you. Cheers.
No problem, bro. All good. All right. Let's look at a couple more coins because then I gotta run and kick on things. So XRP something. Let me just fix up my chart. Something's going on here. There we go. All right. So looking at XRP right now. This is what I'm looking at on XRP right now, minus all the rest of the stuff back here. This all played out as anticipated. Again, whoops, I've got a lot of lines on this chart. Let me just tidy it up a bit for everyone. But basically, what I was looking at on XRP right now, well, previously was this downwards trend channel, right? And we all picked up on that. That's fine. It happened. But again, like we were talking about earlier, we retraced off the 0.61 fibs, price comes back up, hits that 0.23 level, which is great. We punched back above that. We didn't fail. We kind of failed to get past anymore, that $1.50 resistance level. However, right now, what I'm looking at is this. I saw that this was this morning, Bitcoin holding, XRP holding has produced a lower high in this situation, right? Higher low. So again, on this, you've got the Morning Star, would have been a great point of entry. Failed to get it, so not going to rush in. But now we're respecting the trend line. Okay, we're holding above. We tested the resistance level at $1. We failed to break through. Now we've produced the higher low, and we're continuing to respect that trend line. And we've got the bullish engulfing on the trend. We've got the hammer on the trend, and now we've got another green candle producing on the 4 hour. So for me personally, I'm looking to, my strategy is a little bit more risky. I like to purchase off the trend. However, what I would be looking at as a trader is the breakout of this ascending triangle formation for the target on the way back up, right? Your first target would be that 0.50 back here, because that's where you're going to get a level of resistance. Okay. So the way I'd be looking at this is, clear this up, this would be my take profit level 2, also a point of 4 hour resistance. This would be my take profit 1, also 4 hour resistance. Okay, and again, your risk to reward ratio is critical, right? So for me personally, I would keep it below the trend. This would be my target from a breakout perspective up here. That would be my risk to reward ratio with my entry down here. Okay, now that's the way I would be approaching this trade. Because it's an ascending triangle formation, this is the way I'd be looking for this to play out. 1, 2, 3, 4, and on the 5th, the break. Now, for me, that will work. It works with my trade plan. That's the way I would trade that. However, if you're just buying on spot and stuff like that, be cautious. We haven't produced that next level up yet. We produced the lower, excuse me, we produced the higher low, and it's a good indication for me. I've got my 3 points of confirmation now. I've got the respective trend, the bullish engulfing, the higher low. For me, that's enough to get in, and that's what I would be looking at. But again,
Matt,
first, yeah, sorry, go.
Really quick, sorry. What do you mean by take profit 1, take profit 2? So what do you like? You sell half at take profit 1 and or something like that, or like I guess what's the difference between the two?
Correct. So what I would look at, right, and the way we sort of manage things, you'll come to learn this, especially if you start listening to some of those live calls, Boris, is look, if the market's trending up and your trade's going well, is it worth selling the entire bag when you're trading leverage, or should you hold a position if you're already in profit, right? So you can look at it from a couple of ways. You can look at the fact of moving your stop loss into profit once you've broken out and letting it run. Or alternatively, what I tend to do is I'll go, okay, at this level, I'll sell, say, hypothetically, 75% of my bag or 50% of my bag, right? And then from there, I'll let that remainder 50% or 25% run for as long as possible. Okay, because you got to remember there's merit in selling at resistance, which is fantastic because you secure your profits and you take it. Okay, but there's also merit in letting the trade run if it's continuing to go up. Right. So personally, what I do is I'll sell, say, 75% of it and let the last 25% run because I'm already in profit. It works with my trade plan, and I'll just let it keep going. Does that make sense?
Yeah, absolutely. Thanks.
Cool. Let's look at ADA now. I want to look at ADA. So ADA on the BTC chart. So I've already got this drawn up. ADA is obviously a real popular one. We look back over history. This is something that would be great to see. This is what John was talking about earlier, that consolidation pattern, right? So ADA basically consolidated for a fair while, right? Everyone's like, oh, well, why isn't ADA moving? Why isn't it moving? Why isn't it moving? This is why. ADA was just consolidating, right? Until what happened? We got the change in market structure. Higher lows, higher lows, higher lows, higher lows. New trend line formed. Indication that there's going to be a breakout, right? What happens here is we get to that squeeze, ADA breaks out, pumps forms the ascending triangle formation, which is here, and then breaks out again, right? And from memory, this should be 1, 2, 3, 4, 5. See you later. Okay. Then we start punching these all-time highs. We get to here. We fail to break. We produce the lower high like we've seen on a lot of the charts. That downtrend formation starts occurring. And this is the trade me and the guys, or the group, traded the other day, was that breakout on ADA that we shared in the morning. And we had a good pump. I think we cleared, a lot of us cleared probably about a fair bit of profit anyway. And then we sold here once we saw that we weren't breaking through resistance and the price was coming back down, right? So benefits of being a community as well. We're all trading, we're all talking. You've got thousands or hundreds of people, depending on what group you're in, looking at trades for you. And this was enough. We've got the strong demand block, pump back up, we broke out, take profit, sell. Now, the way I'll be looking at this now, let's have a look here. We've got to play around. When we do trend lines, we've got to get validation with the trend. Clear break, that's fine. What I'd be looking at here now is we've held when we look left, right? We look here, we've held where we broke out initially, okay? So we broke out, that was the resistance, we came back up. This would have been a good put of entry if I was looking for another long position off here. Take profit up there again. And your stop loss would be, again, down in this region, right? But also a good indication that, excuse me, sorry. I'm just looking for, where is it? Use that. High or low, right? Watch for the change in market structure, see where we're going to next. Because the other option we could be looking at here is this. Right, now, it's a bit of a worry because you've broken the trend, you want to pump back up. But something you need to be mindful of right now. It's a bit of a risky trade. Just got to watch out to see how that plays out. Personally, I'm not in this anyway, so just watching it for the time being. But again, when I'm looking to trade leverage in particular, I consider three things. I'm going to wrap things up quite soon. I consider the alt BTC chart, the alt USD chart, and I also consider the BTC USDT chart, right? Because if Bitcoin decides to drop, the rest of the market's going to come with it. However, if Bitcoin's stable and the BTC charts, for instance, are going to run, or they're going to break out, then their USDT value is going to rise a fair bit. Any other coins anyone wants to look at? I'm going to do two more and then I'm going to call it.
Can you do tell coin?
Tell, okay. Tell. I've got it on here, I know that. There.
And AGI.
Okay, yep, AGI, done. So TEL's gone up dramatically. Everyone knows that. TEL's gone a vertical fucking leap to the moon, right? So a lot of people get into TEL now because they see how high it is, right? Realistically, this is the point where you should have got into TEL. It's 5,000%, right? This is when I was charting it. It's with one of my guys that joined, who's in our group, Josh, was in TEL, made a ton of profit on TEL, absolutely killed it. However, when you look left on TEL, right, on the weekly, that's where your resistance is at. That's what we're hitting right now. Something to be mindful of is all this section here. All right, it's a big block, yes, but that's the way I'd be looking at it because TEL's gone up dramatically, and this actually peaked. I think it was close to 10 cents, right? So if you look at it, where would we get? 6.5, sorry, my bad. If you look at this, we've gone from here to here, 54% down. So tell right now, let's have a look. Let's draw it up on the fibs and see where things are at, because it's doing it on a monster run.
Appreciate you, Matt.
All good, bro. All good. Tidy this up a bit. There we go. Got it. So with trend lines, right, you want to get usually a couple touches down the bottom is better. One's enough in this situation because it's the wick. It then lines up 2 in the middle and multiples at the end. What I'd be looking to tell right now is it's getting to a point of decision, right? It's on the support line. It's about to hit the trend line. Typically, this is what you got to look for, is which way is it going to move. Okay. You've got a lot of risk in this because you got to get below the trend line. You don't want to put it too tight because you can see the wicks to the left. Okay. All this. So I'd be putting it here. You want to take profit potential at 20. Now it's 1.75, still relatively decent, but it's definitely getting to a point, in my opinion, it's going to start to make a decision on which way it's going to move. It's either going to fall outside the trend and break down, back down to here, around 2 cents, or it'll hold, respect the trend line, push up, get squeezed, and then from the 0.61, you would hopefully see it back around here, the 0.23, which would be an amazing trade. So yeah, there's Tal.
Thanks.
Cool. Yeah, it's Josh. All right. AGI is not working for some reason on the charts. I think it's cooked. So we'll just leave it for the time being.
Got a request for MATIC. If you want.
All right, we'll do MATIC and then that's it, because my voice is cooked.
Matt's pushing in that overtime right now.
Yeah, definitely push into the overtime. So this is the last one. MATIC is obviously gone up stupidly, right? I know some people that have made absolute ton on this. Good on them. When you look at this from a daily, excuse me, sorry. Let's grab it all. Right? It's gone up absolutely correct, mental how much this has gone up. Now, where are we? Get my fibs. This is one thing I love to do, guys. So I draw fibs, pump it up to the impulsive move. Look at it like that. And you can see where that all-time retracement is, back down to 0.61. Guys, fibs is like cheating. I absolutely love it. Draw it like that. Put the 4 hour. See the trends that are being respected. Look for a trend line if there is one. Not something I like right there. However, you can see here, guys, if you look at this, and I don't want to be negative, but it is what it is. I look at this like this. Okay. Now, if you know what a double top formation is, probably something to consider. It wouldn't surprise me if it breaks below this level and continues down. Even though we've come back up, it's then now retesting. I'd be waiting for this next 1 hour and 10 minutes to see if it holds above this level, right? Because if it doesn't, it will likely do this and then this. So something to be mindful of, something to watch for. So basically, I'd just be waiting for the next hour and 10 minutes to see which way the direction is going to be. Also, the one thing I would add to this, I'm a big fan of the CCI indicator to look if we're in the oversold or overpurchased area. We're definitely dipping below that oversold area. But yeah, definitely just be watching this for the time being, because you haven't got confirmation that this level is going to hold yet. If it dips back down, it's going to get quite violent. And if you look at it from the hour perspective, again, not the greatest trend line. So one thing to watch for here, or alternatively, push up, break down, and shoot back up. But yeah, not enough for me to decide which way I'd jump on a trade in this one right now. And guys, you'll realize this once you learn to trade properly, a lot of it's patience. Just wait it out, get the confirmation you need, then jump in a trade. Like me personally, I trade 3 to 4 times a week, max. I mean, when you start to learn to trade leverage and you set your goals, I mean, my goal is to increase my account balance by 10% every month at a minimum. If you trade leverage, you can do that, I mean, with 2, 3, 4 trades if you get them right. So just focus on getting the confirmation. Don't rush. You're not going to miss out on anything. There's always going to be trades there. And don't get emotional. Simple as that.
Hey, Matt.
So, yeah.
Sorry, I know you're cutting this off, but for anyone who knows me from the community, as I teach and explain to students and stuff, I love teaching in analogies. And I just thought of a crack analogy that I want to record it right now, like online, so it's saved, so everyone knows that I've said it.
Okay, bro.
So when you're opening a chart, right? It's like you just walked into a bar, okay? and where the chart is right now is like that super hot chick or that super hot guy that you just met across the room. So where the chart is right now is you've just met them, right? Do you walk straight up to them and say, "Hey, I want to take you to bed"? No, you gotta wait for a couple of confirmations. You gotta see where it goes. Like you gotta buy them a drink. You gotta see where the mood is going, where the conversation is going. If the mood is going up, and then you confirm like they're attracted to you, they like you, they're laughing, they're touching you, everything else, then you're like, all right, I'm gonna put my buy signal right now. Like, can I have your number? Do you want to go back somewhere? Do you want to do something else? If they're not showing any signs and the market's going down and they're not looking at you, they're not responding at you, anything else, you're going to put your sell order and you're like, I'm going to leave now and I'm going to go look for the next coin on the market. See, some of you guys jump into the market like as if you just walked into a bar, you're trying to bang the first hot chick that you see, and you wonder why you're getting rejected 7 out of 8 times or 9 out of 10 times. It's like, you got to wait for the confirmations, guys. You got to buy that drink, got to see where it's going, and then make a decision after maybe 5-10 minutes if you're fast.
So this is how you pick up chicks in a bar, John, hey?
Yeah, I just showed them candles.
Show them your BTC balance. That's enough. All right. I'm going to wrap things up. Anyone's got any questions, reach out to Warren, myself. If you're from Crypto U, reach out to Warren, Empire, or anywhere else, reach out to me. Guys from NBA, John, you've been a legend, obviously. Thanks for your support, bro. Really appreciate it. And guys, just for reference, John's the guy that got me into all of this. Top bloke. So a lot of stuff I've learned, been supported by him. And now we run a really awesome team along with a lot of the other guys. So thanks everyone. We've gone a little bit over time, but I think it's been worth it. And we'll upload this if anyone wants to watch it again anyway. So yeah, take care. Have a good night or a good day. See ya.
Sounds good. Thanks,
Thank you guys so much. Thank you.
Take care, guys.
See ya.